Hello, everyone, and welcome to what is going to be a very short session, not least because I've lost my voice. I have lost it for the last sort of 10 days. It's only just coming back, but I really did want to do this particular video today on Tesla. And I am going to keep it very short. If I do go quiet for a little while, it's just because I'm taking a drink. So thank you so much for taking the time to come and join me. But before we continue, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So the reason I wanted to focus on Tesla is, first of all, I've had a quick look on Financial Juice, and it seems it's up quite nicely. This in pre-market, it's gone up over 1%, but it's really because it's such a great example of the 5 elements, the 5 pillars, if you like, of what David and I call volume price analysis. And I'm going to explain what those 5 pillars are and how they actually apply to the Tesla chart. But before I do that, we really have to go back to an analysis that I did on Tesla, which is dated the 23rd of February, because the narrative, although it began slightly earlier than that, it actually began at the beginning of February, when Tesla was actually struggling. It had had its all-time high, and there'd been a volatility candle triggered, and the price was certainly looking to retreat. After that post, wasn't very well received by the passionate fans, traders, and investors of Tesla. But as my point at the time was that when the stocks go up, but then they pull back and they correct, and corrections and pullbacks are actually really healthy, because maybe traders and investors who missed the first move higher can use it as an opportunity to enter, to buy the stock. The question is, of course, well, where do you enter? Is a pullback simply that, or is it going to be a full blown reversal? And this is where, as I said, these 5 pillars, these 5 elements of volume price analysis can help. The 5 elements are obviously price action and volume. Those of you who come along to this session will know how we talk about how you these two, they are two leading indicators. They are the only 2 leading indicators we have for the chart, and they have a very intimate and symbiotic relationship. But VPA, as explained in my books that you can see here, down here on the right-hand side of your screen, has 3 other, as I said, elements to it: support and resistance, candles and candle patterns, and time. And as I said, with Tesla, we just have this great example of it coming together. So, but if we quickly go, just have a quick look at what happened on the 23rd of February. I picked up the narrative from the second. You can read it on my blog at annacoulling.com. And essentially, it was looking weak, and it was continuing to look weak. And we can see the price action here that I highlighted in this screenshot. And really, what caught my eye was the anomaly on the up candles. The volume wasn't supportive of prices going higher. And I actually ended it saying, well, if the current support level, which at the time was $781, if it fails to hold, we need to consider the weekly chart. So here we have the price action and the volume giving us an anomaly. We have support and resistance. In this case, we have support, and if it's going to break, where's it going to go? And next, we have a candle pattern. This is a hammer candle, and there's a reasonable amount of volume underneath it, but a hammer candle is just one signal. It's the first signal. We need to see follow through, and if we look at the second up candle, it's much wider than the hammer, and the volume is falling. So that of itself tells us, it's a warning flag. It's it's a red flag. It's telling us this is not right. What's also interesting with the price action, it actually then stopped at a resistance level and then moved sideways. And price often does this. When it reaches a key level, and in this case, the key level has been picked out by the accumulation and distribution indicator, which every time it's touched, the line thickens. So it tells us it's a strong level, and it moved sideways, and in fact it was in a sort of channel, as we can see here. This is another support and resistance from the accumulation and distribution, and then we had a break lower, and I think you can just about see that on the break lower, the volume is rising. It is looking to move, coming in, as it were, on the sell side. And this is where we get time in. So this is one chart. This is the daily chart. So, and this is where time is not just the chart that you trade, but also multiple time frames. And this is where it's, we get a clearer picture, a better picture. Well, where do we think, we can see the weakness on the daily chart. Where do we think this price is going to go? And it's staring at us, off the image. It's, if it was going to carry on lower, it is going to go and retest, as I said here, what we call the volume point of control, which is this yellow line. And we can also see there are some price-based support lines. Was resistance, then became support. So a strong region, a very strong region. What I actually said, any retest of these levels will provide strong support. In other words, if they hold, this is where, if it's going to move higher, then this is where it is likely to come off, as it were. And, and where is it going to go, on its journey back up? Well, investors and investors particular will want to see that it goes back to the all-time high, which is $1,243.49. And for anyone who missed that initial move higher, which was actually a break from the volume point of control, we can see the volatility candle that was triggered on the way up. There was another candle, and if we actually look at the volume underneath there, we had a lot of volume under the volatility candle. Then we had another candle which wasn't quite as as rangy as this one, but the volume was slightly less. It wasn't very much less, but it was, if this was going to carry on up to the ever new heights, then you would expect to see much more volume under that particular move. And then we had, as I said, we had this volatility come in. It was also I think at the time when we talked about it in one of our webinars, it was also connected to what was going on in the options market. Anyway, that's now history. This is what the situation was on the 23rd of February. So let's see what subsequently happened on the weekly chart. And immediately we can see the level was duly tested. We had a very deep hammer candle, a hammer with a very deep wick, not a huge amount of volume under that candle. It's not it's not excessive, but the support and resistance came in. It's so strong in the 700 region. It actually held. It was enough to sort of drive the price higher. We didn't get a V-shaped a move. We've seen a lot of those in some of the indices in the past, where one candle and the volume underneath it is simply is enough to actually drive it higher. We can call it stopping volume. 700, it's a nice round number. I suspect there'll be lots and lots of buy orders, lots of investors and traders just waiting for the right price, if you like, to come in and buy, because the volume point of control is this area on the chart, which you could actually say is fair value. So 700, yeah, okay, if it gets down to 700, I'll be interested in buying, and up it goes. Again, we had a little bit of sideways, and then we've had two subsequent up candles, which is great. If we look at the daily chart, go back using the concept of time again, what do we see? And this is exactly the sort of picture that we would want to see on any chart. Once the price gets to the volume point of control, you can see the amount of volume coming in under the daily candles. It all looks, very, very positive, as it were. Up it goes, meets the volume point of control, and then you do get this increase in volume to take it over, as I said, the VPOC, which is exactly what you want to see. I know yesterday was a little bit of we had a little bit of a pullback. We've got with some weakness coming in. It could be profit taking. It could be, who knows? I mean, there's all sorts of reasons. This isn't going to go up in a straight line, and certainly the move higher at in the pre-market, wouldn't have done it any harm, as it were. So that's what I wanted to highlight. As I said, how do you put together, how you see the 5 elements of volume price analysis. And of course, if we go back to the weekly chart again, we've had the volume come in. Nothing is ever guaranteed. These very strong levels of support and resistance, it could be, we could be seeing a further test. Who knows? We will really have to wait and see. But as far as what we can see, certainly on the daily chart, probably not quite so, it'd be nice to see some more volume on the weekly. We've got some quite wide ranging candles. We've gone through some significant levels, which is the 3rd level of the Camarilla pivot. We've actually touched the 4th, where it's come off a little bit. What we want to see all the time, we want to see solid, we want to see healthy volume. I've also put on these on this particular chart, I've got the 50 MA and I've got the 200 MA. It's on here. I sometimes look at moving averages, particularly if they're being mentioned in other commentary to do with the indices and individual stocks. And in fact, one of the reasons it's on my charts at the moment is because there was a death cross that appeared on the SPX, and but so far the SPX, the SPY, and the futures version, it seems to have defied the death cross. So that's where we are at the moment with Tesla. Let's just quickly go back to, I think on the daily chart, we've actually gone through all, we've gone through the levels. No, we're still here on the levels. We've actually come off the 5th level. And with the Camarilla, the way it works is you get different levels on different time frames. So if you go down to the 5-minute chart that we have here, these are calculated on they're refreshed on a daily basis, and look at that. This is so interesting. At the moment, it's now coming to test its version of the volume point of control that we see here on the 5-minute chart. The volume point of control is at it's on different regions of the chart depending on the time frame, and we've also got some very strong support here. Where are we? Just at just over 995. So thank you so much for joining me for this session. My voice has just about managed to hold up. Before I go, can I just point you in the direction of where you can find more details about the indicators that I've referred to, that I have on my chart and I've referred to here. You can find them at quantumtrading.com. It's obviously NinjaTrader. The accumulation and distribution indicator, that's the one that measures support and resistance and thickens the more times the price is tested. That version you will find available for Ninja, TradingView and TradeStation. Unfortunately, we haven't been able to replicate it for MT45. It's because the code doesn't permit us to do so. Quantumtrading.com, and my own site here is at Anna Coulling. So as I said, thank you again for joining me. My voice is improving, so I'm hoping to be able to do more of these videos this week, and certainly by next week it should be back to normal. So thank you again for coming along. Have a great trading day, and I'll catch you next time.